All right, stock market analysis and projections on the S&P 500. Take a look at this important information. It gives you an idea about our approach to the markets and how you use our information and the important aspect of trade ownership. You must own your own trades. All right, the stock market indexes have been in absolute free fall as the tariffs on 184 countries turn into a trade war. Those tariffs turned out to be, well, a lot stronger than the markets or investors had expected, and the intensity of that is scaring people. And China has retaliated with a 34% additional tariff, and that's probably just the start. There's going to be a lot of countries that have that respond to this in this trade war. And then, of course, there's going to be a lot of negotiations. So we expect that's going to move the markets around very significantly. There are, of course, recession fears now and corporate earnings and margin fears, as very likely we're going to see a big slowdown in the economy, not only because of tariffs, but also because the administration is setting up a period of austerity. Well, even though it doesn't look like it now, the government will be spending less money down the road. And there are more worries about the margin calls that are coming in and killing stocks. Money is flowing into bonds in a safety bid. Gold was holding because money was coming into there as a safety bid also, but it is not now. And if you're watching a clip of this show, go back and watch the gold analysis that I did earlier in the full show. S&P 500, NASDAQ down at the worst level, more than 7% on the week. S&P 500 was down about 15% off of that all-time high, and the Russell down as much as 27% from its all-time high, as those small stocks have been getting absolutely killed. All markets are following our intermediate projections and correlations that we have shown for actually months. This intensity of the decline in the stock market is a surprise to me. It's heading down to about the worst levels I expected. But now it is certainly in line with what we were looking at. This is our market week show on April 4th, 2025. I'm doing this recording late morning. A lot of people say, well, why didn't you wait till the close because things are changing so much? But a lot of our members want to see this early so they can have the analysis and adjust. So this is why I'm doing it earlier in the day. So let's take a look as we move forward. We're going to look at the S&P 500, the NASDAQ, the VIX, and TNX, which is the interest rate futures, and you're going to see that we're looking at actually the yields on the interest rate futures, the 10 years. And we're going to look at our level 4 indicators, and we'll take a peek at our Slimulator ranking system as we begin to move forward right now. So let's take a look here as we look at these charts. This is the S&P 500. Now, we had talked about the period of risk right in here, April through June, and the decline actually started earlier than we had expected, right around the end of February. But once our reversal scout turned over here, that sent the market to the downside. And we always say it's so important to understand momentum because that's how you catch the big impulses in the market. And we had warned that, we thought a worst case was that it would get down to 5,100 here. And you could see it actually got very close to that this morning. That's the monthly 38.2%. There's also a support over here at about 49.50, and now it looks more and more like it's going to head to that level, but it might be after some attempted rebound in the market. So each of these yellow areas are areas where the cycle has shown that money was going to flow out of the markets in a correction. You see how that happened here and here, but this was in an uptrend. As you can see, higher highs, higher lows. But once we broke this level right over here is where we really screamed the warning at 56.96, and that was the end of it. Once it had that breakdown and likely to decline out here into the May-June time frame that we're looking at. Some of our things that we look at actually have declines out into July. So we're going to have to see how those set up. This has been a period of risk. And the period of risk has a long time to go, many, many weeks in here to get out to that May-June time frame. And that means that rallies, which we're going to see, and right now we're seeing a pretty good rebound intraday. They are likely to get sold, especially because there's going to be waves of margin selling, and this decline is far from over. There will be bounces. Let's take a look here as we look at the daily chart, and you can see in here our proprietary indicators, and on the bottom over here our OBI is, and I'll show you this in our ranking systems, screaming of some kind of a bottom warning in here. Here's where that support was that you can see where the market came down to right over here. Now there's a minor cycle right in here, and then another one that lands right in here. You could see the 21-day period here, the 20-day period here, and to get out to that 21-day period is going to be out in mid-April. That's what we talked about as that next area. And here's the supports right there. That's that 51.40 approximately. This is about 48.30, and those are from the monthly levels. And you can see looking at this that the where you get a bottom here on that minor dotted cycle, you get a rally and it comes back down to the end of the mid-cycle. That could be what's going on here. We get some kind of rally in here, it tries to rebound, falls again, and then you get some other rebound over here, but then you get this big risk out over here out into that May-June time frame. So these are the minor resistances here. If the market could put on a decent bounce, we could see S&Ps get 53.77 up to maybe 54.55, which would be a very sizable bounce on the upside. But you can see in here it already had a pretty sizable bounce of about, well, that's about 100 points right there today off of its lows. So the market is in a extreme high volatility period, and we'll see that when we look at the VIX. Rebounds likely, further selling very, very likely here as we looked at both the weekly here, which is in that negative momentum condition, the daily here, which is in that negative momentum condition as shown here on the slim ribbon. The slim ribbon PO, this is where you got a warning of the resumption on the downside. Wow, that was phenomenal. You can see that right here, and you can see where you get resumption on the upside and how well that worked. So that is a great indicator. It's a level 4 indicator at askSlim. So if you're interested in that, of course, write to Matt at askSlim.com. Potential rebounds that will fail. Let's take a quick look at the 2-hour chart, and wow, this is 2-hour chart is what we put for you to see how the cycle patterns are working on the intraday, and this shows you that pretty likely to get some bounces up into here and then be moving up again. Let's switch over now and look at the NASDAQ NDX, and you'll see a very similar occurrence as it got down over here underneath that monthly 38.2 and then got a bounce right there. There was a fib extension right over there that came off of this swing right there, and that didn't give it much support. So that'll probably be coming out of there, but this certainly gave it some support here at the monthly 38 and now getting a bounce. Again, this points down to lower levels than we originally had it out into the May-June time frame. This is 16,975 right here. Let's just say 17,000. This one down over here is at around 16,300. So those are reasonable targets out into the May-June time frame. And again, it's very likely to get bounces. Here you could see, pardon me, on the daily chart, gets actually into this fib extension area that we have on there. There's that monthly area where it's bouncing from, and very likely chop around in here, try to get some upside, and then come down again, and then try to rally here, and then a big potential sell-off out over here into this May-June time frame. So get some rallies in here. If you haven't been one of those that have taken advantage of the fact that we warned about the downside risk in this period, then if you get a rally in here, you'd be able to potentially get a better opportunity to do that, or another opportunity to do that in the upside. Or the market, as I said, is going to suffer from all kinds of things that is related to the margin calls, related to a slowing economy, recession, all of those things. And that's a market that will continue to show trouble. I want to look now at the VIX. Let's take a look here, and you can see the VIX cycles. Right here, we can see where the VIX is likely to come down. That would mean that somewhere in here in the short-term rebounding periods that we just discussed is when you're probably going to get a move down here into sometime around mid-April. So some bouncing area for the stock market ends the panic here in implied volatilities. This is the panic buying in the puts is what causes that. And then out over here into late April, May, June is that next period, and certainly could get it back up to the 45 to 60 area or higher in implied volatilities. You see this May-June area right here. That's this period of risk we're discussing in implied volatilities for the stock market. On the daily chart here, you can see that huge upside spike here, and here's that corrective period into this mid to late April period right there. So implied volatilities likely have seen the highest point that we'll see right now and get into some corrective period out over here into this April period right out over here, and then be moving up again as we make that trough. So these are fantastic cyclical patterns in there, but talk about fantastic. Take a look here as we look at this monthly. I'm just going to bring it in here for you to see. And we've been showing this to our members who have seen that we talked about the beautiful description of these harmonics and how we're entering into a period where the stock market was going to correct. That's the gray area right over there where we're highlighting those troughs right here, here, and here, and likely to get much higher implied volatilities, and that certainly happened, as you can see, as we expected that. So we have a long period ahead of us where implied volatilities can be very much elevated, and where rallies in the stock market are very likely to fail. So that's a look at the daily and the weekly in the VIX. And now we're going to take a look at this important TNX. This is TNX. It's colon CGI if you're on the Thinkorswim platform. We had talked about interest rates falling sharply, and we thought that the reason for that would be, well, because the money was going to flow sharply into the bond market out of what we thought was a stock market decline. And that happened exactly as expected. Look at the magnificent harmonics on this chart. If you don't understand this chart and the harmonics, then please take a look at our cycle analysis workshop. We have a special going to start on that in a week, so don't buy it now. In a week, we're going to bring you the special on the cycle analysis workshop, but you can go to the tab, workshop tab, and look at that. There's some free stuff on there, and you'll get a good idea. And we're going to bring you a great price on investing in that workshop. So take a look. You could see that we thought it would come down to about under 3.9%. And that's what it did right over here. This down over here is around 3.6%, a little lower, and that is a distinct possibility. So I'm going to take this and I'm going to move this down here as an alternative, because we have this period over here where the stock market's likely to decline sharply in May and June. That's going to send more money into the treasuries. That's going to send yields down even further. So this is when we saw this breakdown right over here in yields, when it rallied here, failed in the resistance, and came down and broke this level, that's when we really had a sense that the stock market was in trouble, because it meant money was going to flow into bonds. And if money was flowing into bonds, it had to come out of stocks. And if it was coming out of stocks in a period of risk for the stock market, it would very likely be some sharp declines in the market. And of course, that's how it resolved itself. The weekly pattern right over here, the daily pattern right over here. Now look at this daily pattern. This is just fantastic. You see the head and shoulders, how it formed in here? Head and shoulders are formed because of cycle rhythms that you could see. And when the right shoulder tries to rally and fails in resistance and then breaks that cycle line right there, that sets you up for a decline. Here's your head and shoulders. Look at the measurement. Bullseye right over there as it hits that support from the weekly, and now it looks like it's about to move up. What does this tell you? Money is about to flow out of bonds temporarily, potentially with yields popping up and maybe even up here to about 4.07%. that would mean a pullback in the bond market. And why would there be a pullback in the bond market? Because there was panic into bonds and the stock market tries to rebound. So you can help time yourself in here and maybe even short some bonds if you want to make that trade or something like that. If you're a very nimble short side trader, short-term trader that's willing to take that kind of a trade, this is not for investors. This is just for people that are willing to stomach some risk and want to make a trade that I think looks like a decent probability. Bond market's probably going to pull back. The stock market's going to probably try to bounce. And that would be in line with, I'm going to go back to the S&P 500 right here, with this bouncing period over here, either that one or this more dominant one over here that takes you somewhere out into the early to mid-April time frame. So that would be a bounce that it gets set up that, of course, would be followed by a big decline in the stock market. I'm going to show you our ranking system. It's absolutely fantastic, and I'm going to bring that up for you. Before I do that, our day trader service, we're running this for 1 week only, 7 days. This is 45% off, and it's just an unbelievable collection of tools for intraday traders, especially of the indexes, though we have information in here on a lot of stocks also. What you get is the impulse monitor, which shows you the condition. In other words, what is the highest probable direction? When the turbo goes on, it shows you that there's extra buying or extra selling going in there. This is my favorite 8-minute strategy that you get information on, and that little timing line in there that's just fantastic. And then Matt's price zone roadmap in here that really gives you a 15-minute chart that gives you the important support resistances, those yellow acceleration zones. It's just fantastic. It's 45% off, only $24.50 for the next 7 days only. You're going to get that trader cockpit that's live with all of this great information. You can go to askSlim.com and click up on that special, and you'll be able to get more information. And take a look at this. This is our replay system. You have the ability, as you can see, to pick the date. We're recording every single day, and you can scroll through this and get a good idea as to how you would have set up trades, how this information is valuable to you, and how things are changing during the day. Remember, the best money is made by catching the big impulses, and this is designed to help you catch those impulses. Only $24.50. You can have it for 1 month at that price, and this special is only going to run for the next week. So you get a great idea as how you can go and look at these in this replay system. And, look at the day. How could you have set it up? How could you improve your day? It's incredible that we have that. Go up to the top of the askSlim site, click that day trader right there, $24.50. You'll have it for 1 month at that price. Then it's going to renew at the full price at $44.95, but you could cancel anytime if you don't want it to renew. No problem in that at all. And this is a great way, if you're an intraday trader, to really understand how you can catch those bigger swings in the stock market. So I wanted you to see that. I think it's really important. And now let's switch over to our ranking system, which I think you're going to find extremely interesting. Whoops, where's my ranking system? It is right there. Okay, so this is a look at our ranking system. Now, this has got a ton of information there. First of all, it gives you our directional bias for approximately 3 to 6 weeks, so it's kind of an intermediate look at there, short to intermediate term. This tells you that not only the directional bias, but what the market outlook is, and it gives you a little notes about what we're looking for. This is a great tool. It gives you our long-term, intermediate term, short-term, and our option bias indicator. Plus, you can just click on here and it'll open up the charts, the weekly and daily charts. And this is also very important because it shows you the conditions of the particular cycles that are in there. And there's a legend that you can understand what those means. I want to especially go to the OBI index, and I want to scroll down here because we have one of the biggest numbers of extreme oversold conditions I have ever seen. Let's take a look here as I scroll down. Now I'm looking for OBI to get orange. Now, this is so interesting because I just told you that there's a little opportunity in here to be short the bond market after this big rally. See, slightly bullish but overbought. See this P1 orange? That says it's extreme overbought and likely in the next couple days to have a reversal. Now let's look at these stocks here that are N1 orange. These are the ones that are extreme oversold, and you can see Amazon, Broadcom, CRM, Disney, FDX, Google, wow, Goldman Sachs, Meta, Morgan Stanley, Micron, Nike, Starbucks, United Airlines, SMH, that's the semiconductors, XLI, the industrials, XLK, XRT, and of course SPX, RUT, and the dollar. All of those N1 negative. That means that they are extremely oversold, and when you get into market bounces, they are very likely to respond to those. So that's really what was so important when we look at the ranking system. Of course, you can use this and you can know which are the long-term negative or positive, what are the intermediate term negative or positive, the short-term right over there, and of course the OBI right here. All of that just scrolls, and then you get to see our charts right over there. This is unbelievable. You want to know our cycle data only? You see this little thing right here? I'm going to click that over, and this gives you all of the information on our cycle analysis. The weekly timing, the daily timing, there was a lot in there, so it took a moment for that to set up. The individual cycle counts, as you can see, and you can scroll down and get this on all of the key stocks that you would want to trade. These are the best stocks and ETFs that you could possibly want to trade, the highest volumes, and that's how you get all of our cycle data. This is unbelievable. This is a level 3 or 4 product. I wanted you to see that, and if you want to get this, then sign up for level 3 or 4. If you are brand new, write to Matt at askSlim.com, and he's going to ask for a first-time special for a level 3 or 4 service, and you'll be able to focus on that.